Wealth Nation, we are determined to make sure you know how to use whole life insurance to accomplish your financial goals. My name is Carmen.
And my name is Darius. And in this video, we're going to show you 5 different ways you can use whole life insurance to get ahead.
Now, let's go ahead and start with the very first point. We're going to put a status bar up on the screen because we're going to start with the end. The end in mind meaning legacy. So if you get a life insurance policy, you can easily check legacy off, hopefully, because that means you have enough death benefit to pay to your beneficiary so they know how to bury you. They can pay for that, and to make sure that your income is satisfied for at least 10 years. Now, what do I mean by satisfied? If you are going out and making some sort of income, when you have a death benefit, we say that you should get at least 10 times your income at a minimum to ensure that when you pass away, your income can be paid out to the family and they have at least 10 years of income that would be missed if you're no longer here. Now, when we think about this whole legacy play, again, sometimes we just overlook the value of life insurance, because right now, if you're watching this video and you do not have life insurance, that means that you need to be looking around and figuring out who's about to pay for your funeral because you haven't provided them with the funds right now by not having life insurance in order to do so.
Right. And as we talk about legacy, it's not as easy to check off the box of legacy because you have life insurance. We have to also provide the information as to what to do with that income, because your beneficiary is going to get a check for about 10 to 15 years of the income that you would have made. Will they know exactly what they need to do when they get this large sum of money, or will they do something different with it, something irresponsible? So what we have to do is we have to prepare our family with the correct information as to what needs to happen in order for your legacy to continue. Your legacy is, if you were still here, how will your family still continue to realize the income as if you weren't, or even more? So information has to come with that, and there has to be conversation around it.
Yeah, and you could start very easily by creating a will, right? So some sort of legal document saying who's going to get what and why and how, what the distributions are, what assets you own. So that's a great place to start, and then understanding how should the family use the funds moving forward.
Right.
Now, let's move on to point number 2. Point number 2 is, if we work backwards, we assume that prior to you passing, you may be ill. If you are ill, who is going to pay for, or who and how are you going to pay for your medical expenses? So if you are diagnosed with a chronic or a terminal illness, your life insurance policy may be able to help you pay for those things. How? It's called a rider. A rider is a add-on or a benefit that you can add on to your policy at the time you start it, right? We can't add it after the fact, but the point of the rider is that should you get these diagnoses, you can submit the diagnosis and your medical information to the insurance company, and they will help siphon portions of your death benefits so that you can use right now while you're living to help cover some of those medical expenses.
Right. Now, we're talking all this from the perspective of our clients, because for all the whole life insurance policies that we write for our clients, it comes with a terminal and a chronic illness rider. So
as long as you qualify.
As long as you qualify. So if your agent isn't us, you have to take what we're saying from our perspective, because we're talking about it as insurance agents for our clients. Now, the reason why medical expenses is so important, because if you do have medical expenses and you don't have a plan for it, that's going to affect the people around you who have to pick up that slack, realizing their financial goals, because they have to take their income and put it into your medical expenses. Or it's going to affect how you're able to leave your legacy if you have to take a portion of your income that you weren't planning for and put it into your medical expenses. So it's very important for us to have a plan and understand what we need to do in the event something like this comes up.
Now let's move on to point number 3. Point number 3 is retirement. You see how we're working backwards? So, and the other thing to note is, like, you can mix and match this however it works, but we're just thinking chronologically. Prior to that, we assume that you will be thinking about retirement. So what can you do now to ensure that you have the income that you need to enjoy, pina coladas on the beach?
Thinking about it, you're going to be retired.
Or forward planning.
Right, there we go.
So the idea is, in retirement, if you start today, you can create a life insurance policy that will allow you to take retirement income when it makes sense for you to retire, right? So we don't have to wait to the age of 60. If you want to retire at 40, have fun. But the idea is, how can I start accumulating income so that is a non-correlated asset that will allow me to have some sort of income when I decide to leave my job?
It's important for you to have a non-correlated correlated asset like Carmen said, because you have no idea where the market is going to be when you go to retire. So as you're building your nest egg over your entire career in your 401k, what happens if you retire at a down market? What other options are you going to have? Whole life insurance is just another option. We're not saying to just do whole life insurance. We're saying to add it to your tool belt, which is very, very important to have options.
Yeah, because the other thing to think about is if you make a certain amount of income, you can only contribute so much to retirement accounts, right? And if you max out one retirement account, that's not to say that means that you're going to be retired on the beach drinking pina coladas, right? You might be a little bit short. So the idea is, like Darius said, understand what number do you need to retire off of? What is a realistic income that you want to call on every single month? And then going after those assets that will help deliver that. Let's talk about point number 4, which is a little bit out of retirement, and we call it passive income. So like Darius said, we should always have some sort of multiple streams of income and never just be dependent on one. So the idea is being able to use the cash that accumulates in your whole life insurance policy, known as cash value, to create passive income.
So an alternative stream of passive income may be real estate. That's an alternate for us, but depending on where you are in your expertise, it may be something different for you. So we understand real estate. So we would take our cash value and we'll find a real estate deal that we can invest in, a buy and hold, and we'll borrow from our life insurance policy and we'll purchase this buy and hold. This buy and hold will provide us income month after month, and we'll use that income to pay back the loan that we got from our whole life insurance policy. Now, since this is going to be a buy and hold, we're going to have this for however many years until we get to retirement. And that's going to be an additional stream of income because of the fact of us using our cash value multiple times and over again. We've accumulated so many assets that we now have more than what we need or more than what it cost us to borrow the money in the first place.
Mm-hmm. So that's the example of passive income, right? Now let's move on to point number 5, which is everything else. Our financial needs are so great these days that we underestimate how much we are actually financing. And if you go back and look at your bank statement, you'll recognize that we actually finance everything. I don't know if you know that. We're either saving or we're going into debt. Either way, we have to make payments to the savings account or a debt so that we can have the funds available. That's called financing, folks. And so if you're buying a car, if you're using Amazon, if you're buying boats, whatever it is, like our financial needs are so great these days that we just don't recognize the other options that we have around us in order to finance what we call our lifestyle.
Yeah, I like how you said that we're still financing, because just because we're saving money, we don't look at it as making payments.
Yeah.
Like we have a certain amount of income that goes into our savings account, mm-hmm. and we go and we buy something, but it's the exact same thing as making a payment. It's
either payments in either direction,
yeah,
right?
Yeah, exactly.
Yeah, so
I like that.
Either way, it's a payment. So what we were talking about with financing is if you are financing your lifestyle, which you probably are if you have a pulse and are watching this video, is recognizing how you can use whole life insurance to accomplish those financing needs. And if you want to, click on the link below. We can absolutely show you how to do that. Now, when we started our channel back in 2017, we showed you how we used a whole life insurance policy to pay off over $120,000 in credit card debt. And things have evolved for us over the years, right? We've talked about investing in real estate, using our whole life policies to help financing our business, using whole life insurance to purchase a condo. The ideas and the opportunities are endless. So if you can just take a moment and think about what do I need to accomplish financially, 9 times out of 10, I know I'm biased, but I'm just saying, usually a whole life insurance policy can help or can have a play or have a hand in something that you're trying to do. Now, one point that I really want to hit home, which I realize that we haven't addressed, is how you can access the cash value inside your whole life insurance policy in the very first year. Because we do get comments where people say, oh, it takes a while for the cash to grow. And that is correct. However, if you work with an agent that knows how to accelerate the cash value by adding a paid up additions rider onto the policy, you can have access to cash in the very first year. So that's why Darius and I are able to create passive income and start all of these things that we want to do with our financial goals in the very first year of using our policies.
Right now, where we are right now, we've had our oldest policy for about 8 years, and it's considered a seasoned policy. So even if we didn't add the accelerated paid up addition rider on it, we still would have had cash value. So if you have an existing whole life insurance policy and it wasn't designed to have cash value in the first year, you're still going to have cash value. So leverage the tools that you have right now, because the cheapest life insurance you'll ever get is the insurance that you purchase right now. And before that is the insurance that you already have. So leverage the tools that you actually have and have access to make sure that you're able to take care of your family, yourself and your family moving forward. So if this is something that you're interested in, make sure you click on the link below to meet with a member of our team to get your questions answered about how you can specifically use life insurance to accomplish your financial goals.
Now, Wealth Nation, obviously you can see how passionate we are about whole life insurance, and we say that we use whole life insurance to own our own lifestyle. And the meaning behind that is we are in control of being able to accomplish our financial goals. So we hope that you want to take more ownership in achieving your financial goals today.
So own your own lifestyle,
or someone else will.